Imagine sitting on 99 Link tokens today. With Chainlink trading at around $16 in mid-2025, that's a position worth roughly $1,580. You're not exactly breaking the bank, but you're not playing with pennies either. The question is, will holding these tokens for another year make a real difference or just leave you stuck? But before we continue with the video, I just want to say, if you're looking for a solid exchange to trade crypto, I personally use WEEX. It's reliable, has deep liquidity, super low fees, and a massive selection of coins. Right now, you can claim up to $30,000 in sign-up bonuses and trade with up to 400x leverage. Best part? No KYC required. Use the link in the description to sign up and claim your bonus today. Let's break it all down in this video. We're going to look at Chainlink's 2025 performance, major ecosystem developments, adoption trends, and where Link might realistically be headed by 2026. By the end, you'll have a solid sense of what your 99 Link might be worth if the bullish case plays out, or even if it doesn't. Chainlink is not some hype-fueled meme coin. It's been a core part of crypto infrastructure for years, powering price feeds, random number generation, and off-chain data connections for thousands of smart contracts across dozens of chains. It's the middleware of Web3, the thing that helps blockchains actually interact with the real world. Now, in 2025, Chainlink isn't just maintaining its reputation, it's expanding it. One of the biggest developments this year has been Chainlink's Cross-Chain Interoperability Protocol, CCIP. It allows data and value to be sent securely across different blockchains. Think of it as the internet's HTTPS protocol, but for crypto. CCIP has gained traction with institutions too. In Q1 2025, Swift completed additional pilot programs using CCIP to move tokenized assets between banks. This includes stablecoins, real estate-backed tokens, and more, all secured by Chainlink's decentralized Oracle network. It's not speculation anymore. Chainlink is moving into real enterprise adoption. Meanwhile, Chainlink's proof-of-reserve feeds are helping keep centralized assets honest. USDT and USDC issuers, along with liquid staking platforms, rely on Chainlink to show that their reserves actually match what's on-chain. In a world still recovering from the trust crisis of 2022-2023, that transparency is crucial. On the token side, Link's utility is becoming more defined. Staking launched in late 2022, and by 2025, it's become a major component of Chainlink's security model. Link stakers support Oracle services and are rewarded with protocol fees and inflation-based incentives. The upcoming staking V0 2 upgrade is expected to bring more flexibility to unbonding periods and delegation, which could attract even more participants. Chainlink's total value secured, TVS, now exceeds $25 billion across major protocols. That number has steadily climbed throughout 2024 and 2025, especially with the growth of L2S like Arbitrum and Base integrating Chainlink feeds for DeFi applications. And it's not just about DeFi. Chainlink is powering dynamic NFTs, gaming protocols, and insurance products with real-world data like weather, sports results, and financial market feeds. Developers building on platforms like Avalanche, Polygon, and Optimism are increasingly integrating Chainlink because they don't want to roll their own oracles, and because Chainlink has proven uptime and accuracy. This brings us to the current price point. Link is trading around $16 today. That's a far cry from its 2021 high of over $50, but the market context is completely different. Back then, it was driven by hype. Today, the price is being supported by actual adoption and utility. So what might happen over the next year? Let's walk through a few scenarios. In a conservative case, Link continues growing in utility, but overall market sentiment remains lukewarm. In that case, we could see Link hovering in the $18 to $22 range by mid-2026. Your 99 Link would be worth around $1,800 to $2,200. A solid, if not thrilling, gain. In a more realistic bullish scenario, CCIP sees wider integration across enterprise blockchains and new Layer 2s Link staking expands, and Chainlink becomes the default Oracle solution for tokenized real-world assets. With that kind of traction, Link could rise to the $30-35 range, pushing your 99 Link stack to nearly $3,000. Now let's imagine a more aggressive bull case. The total crypto market cap swells again, institutional use of Chainlink data explodes, and on-chain finance becomes a real alternative to legacy systems. Link could revisit its all-time highs or even exceed them. A price of $45.50 is not out of the question. That would make your 99 Link worth between $4,400 and $5,000. But what's driving those scenarios? First, it's the role Chainlink plays in real-world adoption. Tokenization of assets is a multi-trillion-dollar opportunity, and whether it's BlackRock, JP Morgan, or the Hong Kong Monetary Authority, nearly all major players are exploring or piloting tokenized assets. Those systems need secure, real-time data. That's where Chainlink fits in. Second, CCIP is positioned to be a universal standard. The crypto space is fragmented across dozens of chains and Layer 2s. If Chainlink becomes the default way to move assets and data between them, its importance skyrockets. Third, Chainlink has no serious competition at its scale. There are other Oracle solutions, but none with the track record, uptime, or enterprise relationships that Chainlink has built. That moat matters more as the space matures. Still, no project is without risk. If CCIP adoption slows or another cross-chain messaging protocol steals the spotlight, Link's upside could be capped. The token's inflation model is also something to watch. Staking helps, but if demand doesn't keep up with issuance, price pressure could build. There's also the macro picture. If crypto enters another bearish phase due to regulation, economic shocks, or black swan events, Link could retrace along with everything else. But so far, Chainlink has proven resilient through multiple market cycles. So to wrap it up, if you're holding 99 Link right now, you're not late. You're early to a token that underpins some of the most mission-critical infrastructure in crypto. With continued growth in tokenized assets, smart contract adoption, and institutional involvement, Link's upside remains very real. In a slow market, maybe your stack inches up to around $2,000. In a strong market, $3,000, $4,000 is realistic. And in a full-blown breakout, you're looking at $5,000 or more. Where do you think Link will be by the end of 2026? Drop your predictions below, and if you want more deep dives on high-utility tokens like this, don't forget to like, subscribe, and stay tuned. See you in the next one.